Hi guys, welcome to my YouTube channel, and in today's video I am going to be sharing with you how to properly identify key levels in the market. Endeavor to subscribe to this YouTube channel. You can watch my previous video on some of the trades I've taken, so you can also learn more. And if you subscribe to this YouTube channel, you will always be notified whenever I drop a new video. Also like this video if you find it interesting and if you find it educative, so that YouTube can also recommend them to other forex, crypto and stock traders who may need this video. Without wasting much of our time, let's get right into the video. Now, either you are a trader, you are a forex trader, you are a crypto trader, you are a stock trader, you will definitely know when to buy and when to sell each currency or each crypto pair or anything you want to do. You will need to know when to buy and when to sell. You can't just come into the market and you feel like, oh, I want to buy at this level, I want to sell at this level. You need to make sure that the market is actually, the price of the market is at a key level. When the price of the market is at a key level, it gives you more confluence on when to buy and when to sell. That way, when the price gets to a particular level, you can be on the watch out and see what the price does at that level. If the price is going to continue bullish or the price is going to reverse to a bearish direction. And if the price was previously going in a bearish direction, you would then be notified early if the price is going to change into a bullish movement. Quickly, as a day trader, I use my 4 hours to identify my key levels. But either you are a day trader, you are a swing trader, or you are a scalper, you definitely need key levels in the market. The only difference is that our time frame to identify the key levels might be different. But in today's video, what I'm going to be sharing with you, you will be able to apply them in different market time frame and different market condition. But for me as a day trader, I do usually use my 4 hour time frame to identify my key levels. So in no time, let me go to my 4 hour time frame. Now, since I have my 4 hour time frame now, you can see the price has been going bullish, bearish, because in the market, you always see a bullish move, a bearish move, a bullish move, a bearish move, a bullish move. Or you are going to see a bearish move, a bullish move, a bearish move, a bullish move, a bearish move. But at a time, you might see something like this, which is going to be taught in another video if you don't know about change of character in the market or a market structure shift, which sometimes indicate that the market is about to change direction when the market is not being able to print a lower low or being able to print an higher high in the market. So you'll be able to know when the market is about to reverse or when the market is about to continue in its previous direction. So quickly, let's get into the lesson. So when we talk about key levels, to identify key levels, it just simply means that where price has reacted to in the past, maybe some months ago, some days ago. It's just a point where price has reacted to in the past. And when price gets to that level again, it is most probably going to react at that exact level again. Either it's going to change direction or it will give you signal that the market is about to continue in its main movement. So for you to be able to identify that this point is a key level, you need some criteria, and the first criteria you need is that price should have reacted at least twice at that particular zone. Just at least twice at that particular zone. It doesn't have to be 3 times, it doesn't have to be 4 times. For some people, they use the price reacting 3 times, 4 times in that particular zone. But for me personally, once price reacts at a particular level just 2 times, I know there is something happening in this level, and so I identify such level as a key level in the market. Now, and there are different ways I identify different touches. I don't identify my key levels by something like this. When you see a price go up, come down, goes up, come down. Not just this way I identify my key level. I identify my key levels in different ways. Now, let's go to a blank chart. Let's go to a blank chart. Let's say we have something like this. We have an higher high, an higher low, and higher high. Then market comes to this level, around this level, which is this, the previous low, comes to this level and then pushes up again. This particular level that market has touched twice is now my key level in the 4-hour time frame. I only do this using the 4-hour time frame in the market. So let's continue. So when price reacts in this way in the 4-hour, I automatically know that this particular level is a key level in the market. And when price comes back to this level again, I watch out for what price is about to do at this level. If the price is going to reverse, if it was coming in a downtrend, or the price is going to continue in its bearish move. Another way I identify it in the market is this pattern. When there is a move, an higher high, an higher low, and higher high, the market breaks past around this level, then it comes back to test this level again. You can see that this particular level, price has reacted to it twice. So basically, I identified this particular zone that price has reacted to 2 times as a key level in the market. So when price comes back to this level again, I look out for what price is about to do again at this level. If the price is going to get to this point, then reverse, or the price breaks above it and continue in its previous movement. Another way I identify key level in the market is when there is something like this. It doesn't have to be an external structure, it can be internal structure. When I have something like this, a bullish, an higher high, and higher low, and higher high, and higher low, then part of the internal structure, I now see something like this. Internal structure, something like this. It can be once, it can be twice, then market goes again. This particular level that market reacted to, touched at least 2 times, I regard this as my key level. It can be in the internal structure and it can be at the external structure. Let's get straight into the market so we can be able to identify what I mean by at least 2 touches in the market. Now let's start from this particular point. Let's look at this zone. There was a bullish move, an higher high, an higher low, an higher high here, an higher low, an higher high, an higher low. At a point, price came back to around this level. There was a mistake here, sorry. There was a mistake here. There was this move here. There was a low here. A move here. There was a low here. And then there is another move here. What do we notice? That when price came to this particular level, there was a reaction again at this particular level. Look at. Price came back to this particular level and reacted again twice. Look. Price touched it once, went up a little bit, touched it again before pushing up. That tells you that this level is a key level. You can see that it even aligns with this particular low here. So we can mark this level out and mark it as our key level in the 4-hour time frame. You will notice that when price came to this particular level again, it reacted before pushing up and then breaking that particular level. Using your key level does not mean you are done using that particular level. You will notice that when price came back to the level over and over again, it kept reacting at this particular level. Look at, price got to the level, pushed up. Price got to the level here, pushed up, got to the level again, pushed up, got to the level again, pushed up, then eventually passing the level, then testing the level back again before eventually pushing down. You will also realize that when price got to that particular level again, it touched it again at this level and the market moved down again. You can see why key levels are very important in the market. You can see how I identified just this one single key level and it has affected the market in a very significant way. Let's look at another key level. Look at this particular point. There was a first touch. The market pushed up and there was another touch at that particular level. I told you that when market touches a particular level at least 2 times, you can mark that level as your key level, and watch out for what price does when price comes back to that level again. Now you will notice that since if we mark this particular zone as our key level earlier, you will notice that when price got to the level again here, it reacted, it broke it. Look at, price reacted at the level again here, price reacted at the level again here, and price reacted here again, this particular level. Now look at it, price got to the level, price got to the level, that was what caused this push up. Now when price got to the level again here, there was a little push up before the market broke, before it broke that level, and you can see that the market tested that key level again before pushing down. You can see how to identify these key levels, and when the market touched this particular the level again, you can see how it reacted before pushing up. And when price also broke the level again here, it also reacted, came back to retest that level before pushing down. You can see why you need to identify your key levels in the market. Key levels are what controls the market direction. Key levels have significant roles in the market. Let's look at another example before we end this video. Now let's look at this level. There was a push up here, there was a push down, then there was a push up again at that same level. That tells you that the market has tested that level twice. It simply means there is something going on there, and we can simply mark that level as our key level in the market. Now let's mark that level as our key level, and you will notice, let's mark it out. Now price passed the level. When price got to the level here, you will realize that price reacted at that level before pushing up, and eventually price came back to test that level again before continuing the upward move. Now when price came back to the level again, the market price still reacted at that same level, pushed up, pushed down again, reacted, pushed up a little bit, then broke that level. Now look at what the price has been doing at that key level again. Price is there again, and price is already reacting at that key level. As a trader that has the knowledge of a key level, you simply know that at this particular level, the market is trying to pick a direction. If the market is to push down from here, if the market reverses from here, the market is going to keep pushing down. If the market breaks it successfully, then it simply means the market is going to keep pushing up. That is how to identify your key levels and how to use your key levels in the market. If you are here to subscribe to this video and you watched it to this level and you have gained something, please subscribe to this YouTube channel. Share this video, don all this information, make others become a profitable trader by understanding key levels. You can watch my previous videos, check the trades I've taken, the way I analyzed it, and the results we got by just our simple analysis. Enjoy the rest of your day.